Hey folks, welcome back to the Edupedia world, and I am Abhinay Gupta. And today again we continue with the chapter Audit and Auditor. So guys, remember in the previous lecture we were discussing about section 143, right? And as I said, you do not have direct questions to this section generally, but yeah, you may have the reference and very indirect questions, right? And the knowledge of these items included in this section is very important for you as well, right? But since the lecture was going a little long, we cut it short in the previous lecture, and the remaining positions or the remaining portions of the lecture will be covered today, right? So before giving much of an introduction, we'll move ahead with the continuation of the previous lecture, right? So first we had discussed the remuneration of auditor, section 142, which is discussed by the members in the general meeting. In case of first auditor, it is done by the board, and it includes out-of-pocket expenditure and any facility given to the auditor. Powers and duties of the auditor and auditing standards, rights and duties, right to access all the books, right to require any information that they want, and the duty is to make inquiries. Further, duty to make report. The auditor shall make a report on financials to the members regarding true and fair view of the financials, because true and correct cannot be given. He shall consider provisions of accounting and accounting standards for making the report. Right? So this is where we concluded the lecture in the previous class, right? Today we move ahead with the next topic, which is the report on the principal assertions, right? Section 143, subsection 3. Okay, so we go ahead to understand what are the specific assertions on which you have to report, right? Generally, you have 10 assertions and you have to report on all those 10. So on the screen, I'll give you just one liner for those assertions and then discuss it in detail with you. So first assertion says that he has to report on the matters whether he has asked and got all the information needed for the audit, and if not, details and effect of the same. So it is the duty of the auditor, right, to obtain all the information and explanation to the best of his knowledge and belief, which is necessary for the purpose of his audit. So if he thinks that, okay, if I need to audit and if I need to report on certain matters, right, I just cannot go ahead with doing that. I need a lot of understanding on the same as well. And now in order to gain that understanding, there may be information that the auditor may require, right? So this section says that this is an assertion and you have to gather all the information that you think you will require to give out a correct report on the same. Right? And if you do not take information on anything, or if you do not get an information on anything, the detail thereof and the effect of such information on the financial statement should be recorded by you. But yeah, this is what I did not check, or this is the information I did not get. Please provide all the detail of the same and then write that, okay, the impact of this would be this, and this. Which means if it's a major impact, you again go ahead with qualification also. If it's a minor impact, just make a statement that, okay, this may have this much of impact as well. So I leave this area gray, right? Next, whether proper books of account required has been maintained. Yes. Now the auditor has to check and he has to know what are the books of account that is required to be prepared, right? So if in his opinion proper books and accounts which is required by law have been kept by the company, right? And then when he examines it, he goes through everything and he finds everything to be correct and everything to be appropriate as per the legal requirement, as per the requirement of the law. And if he needs more detailed information about anything, right, then he also has to report whether he has received the information from the branch, right? From the branch that he has visited, he has received the information that is deemed. But the branch that he has not visited, will he skip that branch? The answer is no. So why did not he visit the branch? It's because maybe he did not feel it necessary. He just called for certain information from the branch. By checking those information, he understood what is going on in the branch. Maybe the magnitude of the branch was not that huge, right? So he has to report, right, whether proper books and of accounts has been maintained by the company on the whole, right? And that will be done with after checking the branch accounts as well, right? Next, whether report of branch office audited has been received by him. Now see, the branches, right? It is not compulsory that an auditor who gets an audit of the head office is also responsible for all the branches. It depends on the magnitude of the company, right? The company may say that, okay, for this, and this branch, which may be in a foreign location, which may be in some other location, right? Let me hand over the audit to some of the local people over there, right? You'll be okay. Let it be given to the local person. But does that relieve you out of your responsibility? The answer is no. That auditor is responsible for that branch. Agreed. But you are responsible for the company as a whole. So what will you do is, if you don't feel like going to that branch, you will call that audit report from that branch. Right? And then you will review that audit report and then try and take an understanding whether the auditor who has been given the responsibility of that branch has performed his duties appropriately. And if you are satisfied with everything, you carry on and attach that report along with the report that you are submitting. Right? So that will be sent to you and you will check the manner in which it has been dealt, and you will decide of how has it to be taken forward. Okay with that? Next, whether balance sheet and P&L are in sync with the books of accounts. So understand, when you are providing the report, right, the whatever audit report that you're providing, you will attach your balance sheet and P&L with that. Now the entire books of account that the client has maintained, right, that books of account and the balance sheet that you have presented should be in sync. When I say it should be in sync, is whatever information are given in the books of account has to be dealt with in the balance sheet. They have to be reflected at some or the other position in the balance sheet. That is how we say that yes, the balance sheet is in sync with the informations or the books of account of the company. Right? Now, the report of the auditor will also state whether in his opinion the financial statement that has been prepared by the company adheres to the accounting standard prevailing at that point of time. Why I say accounting standard prevailing then is because earlier we had the accounting standards 1 to 32 except 8 and those stuff, right? Then we start following Indian accounting standard and then IFRS, and there are other requirements. Some companies do this, some companies do that, some companies still into the shift, some companies adopted IFRS. The shift is still in process, right? So whatever be the accounting standard that is applicable on that company at that point of time, the auditor needs to check whether those accounting standards have been complied. Right? So like if I take an example, if we are dealing into a scenario where we are testing the lease agreements, right? So when we are seeing the lease agreement, we'll also see that in that agreement, the terms and conditions that have been provided, right, they are in line with say AS19 leases, right? We need to check what is being done with the operating lease, what is being done with the financial lease, did the criteria qualify for the financial lease and stuff. All those things have to be checked. If you look at AS15, employee benefit, AS16 borrowing cost, right? So all those loans and that stuff that you have taken for the company, right? Is it a specific loan? Is it a general loan? Where are the interest rates going? Where has they been reflected? Where has those expenses been knocked off and all those things? You will all go ahead and see in connection with the accounting standards, right? So all those specific topics for which accounting standards are there, right? Everything with those topics has to be dealt with the accounting standard. Right? Next, comment on matters that have adverse effect. So the report of the auditor, right, it shall state the observation and the comment. Right? So you as an auditor will provide your observation and comment on the financial transactions or all the matters that have an adverse effect on the functioning of the company. So while you were auditing, right, you came across a transaction, right, which you think will impact the company in a negative way, right? Then what is your observation for that and what comments you have to give? You will write it down in the audit report. That okay, these deals have taken place, these transactions have taken place over this period under audit, right? And according to us, this is where it has gone wrong, or this is why it should not be done, and this is the remedy for this, this is the better way out of it, and all those things, whatever you want to specify, you write it and give it over there. So anything that you think will have an adverse report, you need to report it for the members. Right? Next, whether any director is disqualified from appointment. Yes, you will have to check, right? You will have to check all the provisions which are related to the qualification of the director, the disqualification of the director, and see whether those disqualification had already prevailed at the time of the appointment of the director or not. So if a director is appointed, you need to check whether his appointment is appropriate. And further also you need to check is that after being appropriately appointed, is there any disqualification that has been attached to the director later? Right? So these things you have to be very careful with. Right? Otherwise the company will be in a big trouble if the director is disqualified and the director has been performing and signing on behalf of the company. In future it can be a big trouble for the company, right? So you'll have to check and keep checking every year whether there is any disqualification attached to the director of the company, right? Next, whether company has proper internal financial controls, right? Do you understand what the company means to actually convey? So see, you have to maintain the accounts, right? The finances of the company has to be maintained. So the auditor shall state as to whether the company has actually formulated an adequate financial control. As an auditor, when I come, I check, I perform a walkthrough, I go through all the processes, do the test check and everything. I go, if there's a computer, I go around the box, through the box, the black box, white box approach, like whatever things I do the tagging and all those things. But the point is, all I need to check is that at every transaction, are there proper controls? Are there authority matrix in place? Right? Who is the authorized person to get ahead with such dealings? All those things have to be checked. Right? Whether I understand, okay, there may be a procedure that company is performing very well, everything is going right. But is it just going right because the person is supervising it? It is because somebody has managed it very well, or because the company itself has installed internal financial control measures at different places. So if those controls have been performed, please check that whether those controls are effective and efficient. If there is any scope of improvement, please comment on the same. And if they are not performing very well, you have to report on the same as well. Right? Other matters prescribed. When we say other matters prescribed, it can be anything. Right? So what they're actually trying to do is trying to leave an open space. That okay, these are 9 that we have already specified. Out of these, you have to do it. But if there are certain extra that pops up later, let us keep a room for that. So we say other matters prescribed. The law will at any point of time prescribe the other matters and attach it to this. Right? This is just a medium to show the extension that is possible. Right? Next, the other matters which has to be included. So it has been prescribed, and they have been prescribed as per rule number 11. So if you see, wherever we have seen the prescription in the past, right, like if you remember in the case of the qualification disqualification, we saw that the person, the relative or the partner, right, if they hold securities to more than the limit prescribed in the cash, then they are disqualified. Remember that? Remember cash, company, associate, subsidiary, holding, and subsidiary of holding. So over there they said limit prescribed, and then they prescribed the limit in the rule number 10, that the limit would be 5 lakh rupees. So wherever you see there they say as per what is prescribed, then for that prescription there has to be a rule, and that rule defines what is prescribed. Getting what I want to say? So over here when they say as per the matters prescribed, so far the extension goes on to 3 things. Further, this extension may also expand. Right? So when we talk about other matters, the auditor shall include in his report, right, his views and comment on these 3 matters. One is the pending litigation and its impact possible. So the auditor needs to check, is there any case, any litigation pending with any court, High Court, Supreme Court, district court, whatever. Is there a litigation pending? If there is a litigation pending, right, then what is the possible outcome of the litigation? Understanding? If it is a sure shot win, I take it. I say that okay, that is that is a litigation in our favor already. If there is a doubt, providing for that, provisioning for that, and all those things. So whatever pending litigations are there, right? Whatever be the outcome, what impact can it have has to be demonstrated by the auditor. That if it is favorable, this is the impact. If it is not favorable, this is the impact. So both ways, please analyze and check on your end. What has auditor got to do is to just specify that whatever can be the future of the litigation. But if yes, then this. If no, then this. Next, provision for long-term contracts and derivative contracts. So if you have entered into a long-term contract, right, like for example a derivative contract also, then you don't know, right, put or call what is it that you want to take, because you don't know the fluctuation of security. If it is a loss, then you have to provide, right? You have to provide for. So the provisions have to be created for anticipated losses in future, because you're not sure if it's a derivative whether or not it will be a profit. If it is a profit, then it's no point of derivative, right? Why do you go into derivative? Just buy the shares and keep it. It's a profit, sell it off. Getting the point? So that is when derivative contracts come into place, where the put and call comes into place, is because it is uncertain, right? So if it is uncertain, whatever be the maximum loss that you anticipate, you always create that bracket. You remember, if you prepare your SFM, the bull strategy, butterfly strategy, condor and all those things. So when those things are taking place, you're actually trying to prepare a bracket where you limit your loss, that okay, this is the maximum loss I'll bear. If I'm at profit, it can be unlimited. Remember that? So whatever loss you have fixed, that okay, if I'm at loss, this is my maximum loss, please provide a provision for that loss, is what they want to say. Delay in transfer to Investor Education Protection Fund. Now this is a mandate. So you have to create this Investor Education Protection Fund, pass on the amount to that. So this is also a mandate that okay, if you have prepared it, you have to make sure whether they are timely transferring the amount to Investor Education Protection Fund. Right? We'll deal in detail with this term in Investor Education Protection Fund in the chapter where it is relevant. Right? For example, if I give you a small example, dividend, right? Unpaid for such a period of time, 7 years or something, and then it goes on to Investor Protection Fund. So you'll have to trace that okay, if there are certain funds lying with the company which are supposed to be transferred to the Investor Education Protection Fund, whether the transfer is being done on the appropriate time and the appropriate amount, whether those transactions have been completed during the year, is there something accrued, right? So even this is an extra matter added on. Okay, and at last, the reason for any negative answer or qualification, right? So whether any of the matter which is required to be included in the audit report is answered in a negative or in a negative way, or any qualification has been attached to it, right, in the report, then you'll also have to give a reason to it. That if you have qualified something that okay, this is something I don't like, this is something which is not going appropriately or as per the law, as per the standard or anything, then why do you think so is also something you need to mention. So you have to give a reason of why have you qualified the same. So if there are just 1 or 2 qualifications attached to the report, you'll just reason out, okay, these are 2-3 qualifications. Apart from this, it's a true and fair view. If it is a disclaimer, if it's an adverse report, right? So there are a lot of qualifications and a lot of negatives that you write down, right? So you'll have to give a reason for all that. Even if you're disclaiming a report, you have to give a reason. Why are you disclaiming a report? If you're giving an adverse report, give a reason. Although these two situations are rare to find. You don't find an adverse report. You get a disclaimer, or the auditor will leave the audit. Right? So it is a very rare phenomena that you find about a disclaimer or an adverse report. But your qualification is something that is a normal phenomena. That okay, apart from all these things, it is a unqualified report. When it is unqualified means it is a good news, right? So the terminology goes a little opposite. So okay, if the company is qualified, that means you're wrong. If the company is not qualified, if the report is unqualified, that means it's good. So if there is any qualification that you have attracted, just give a reason to it. That's it. Right? So please make a note of all the assertions and the other matters which are prescribed to it. And that is all. Since it was a little lengthy, I'll just take you through it once again. right? So all the information that you need, whether you have got it or not, say it. Whether proper books of accounts has been maintained as per the law, report it. Whether you have received the branch accounts and stuff, audit from the branch and all, mention it. Whether the balance sheet and P&L as per books of account, AS has been complied. Does the is there any adverse effect on the financials? Right? Is there any director who is disqualified because that will have a long-term impact? Right? Is there the proper internal financial control mechanism set up by the company? And other prescribed includes any litigation which is pending, what can be the major impact? Any derivative contracts, what can be the impact? Please provide for the provision, please provide for the losses, and delay in the transfer of investor education fund, if any, has to be reported, right? And then give a reason for all the qualifications that you have made. Is that clear? That is all about section 143, right? So there are some special provisions also, but if I say that is in relation to the government companies. So you will see that in this chapter we are talking a lot about the government companies, right? So initially you used to have a chapter government company lengthy chapter. Now it's a very small chapter or even gone, right? So all the government company provisions are included somewhere in the between the chapters. So for section 143 also we have certain requirements with respect to the government companies, which is section 143 subsection 5, 6 and 7 to be very specific. But we'll take those sections up in the next lecture. Right? As of now for this lecture this is enough and we'll go ahead with it. Right? So I'll see you guys back in the next lecture. Until then, this is Abhinay Gupta signing off. Thank you and bye-bye.